Stay on top of stories about stocks that may impact the market or your portfolio today in Stocks Making News.
Is Groupon broke the way a lot of people say it is? And if so, can it be fixed? Tracey, Ryniec, and Dave Bartosiak here with me to try to figure this all out. Tracey, as far as fundamentals go, they posted a net loss, Groupon did, of $27.6 million in the third quarter. Guidance going forward, weaker than expected. However, on the flip side, active customers grew by 4% from the previous year. So has the company stopped growing?
For right now, yes. But there is this myth that, Groupon has been doomed for years now and it's still going to be doomed. But when you actually look at the numbers, it's been a pretty good story for them, just maybe not as good as what Wall Street would have wanted. Mm-hmm. But I brought a chart of the revenue growth since they went public. Okay. And I mean, it's tremendous double-digit gains up through last year where they grew revenue another 24%. It's only this year you're seeing it down a couple percent. And then next year they are expecting it to be lower. That was in the guidance that they gave. That was disappointing. But that's because they now have a new CEO who just took over, Rich Williams.
Right.
He was already at the company for the last 4 years, so he's familiar with everything and what's going on there.
Right.
So he's, stepping into the leadership role with real knowledge. So he's moving kind of quickly to make these changes. In September, even before he took over as official CEO, he laid off 1,100 people worldwide, mm-hmm. and they're pulled out of 7 different countries. So they're consolidating into the markets they know are working for them, and that means a little bit less overseas. But North America in this last quarter, sales were up almost 11% in North America. So they're changing their strategy a bit, and they're going to dump a whole bunch of money into marketing to try to grow both the customer base and the user base, which is about 50 million people worldwide are the regular user base. So there is, the new CEO even wrote a blog post posting the myths of Groupon.
Yeah, I saw that.
Yeah, and one of them was that the email deal is dead. Nobody's doing these kind of Groupon email deals anymore. And that may be via email, but via other avenues, people are definitely still doing the Groupons, as you can see even from, yes, the revenue is declining, but there's significant, revenue still with this company.
Yeah.
I also put up what you were just mentioning about the loss they had this last quarter, and you can see the estimates are coming down for this year because they did guide lower, and then for next year, the analysts had to fit in this new strategy because the company is going to spend about 150 to 200 million on marketing alone through next year. Another thing I wanted to point out, I did look to see how much cash they had on hand because, they are going to see a loss next year. So, how long can they keep this kind of thing going? And they have almost $1 billion in cash. So they could last pretty long with that hunk of change there. And surprisingly, they're still doing a share buyback program. And they have about 270 million left on that through 2017. So, they're still managing their cash flow well enough to be doing a buyback.
So the CEO says he's optimistic about being able to turn the company around for whatever there is to be turned around.
Right.
Right. And I guess, though, that when you take a look at the positives and the negatives, it still begs the question, should they have taken that Google takeover offer back in 2010?
Right. I think that'll haunt them for forever, right? Everybody, for at least for right now, when Dave's about to show you the chart and you look at that and you think, they were crazy not to take it. But, they're looking at the longer objective here, and they seem pretty optimistic, so I feel optimistic for them.
All right, Dave's excited to get to his chart. Dave, company shares plummeted 65% just this year, according to published reports. And according to published data, hedge funds with long positions in this company have declined 24% just from the second quarter. It's not a pretty picture.
It's not. I'm trying to find some sort of, silver lining on this cloud here.
Okay.
And you're not going to find one in the chart, right? Let's take a quick look at it because you really, where's the support here? Can you say dead cat bounce? I didn't hear a meow. But that's just a downward death spiral into oblivion. There's like a little bit of support in the $250?
Yeah.
Like $2.50, $3. That's what we're talking about?
Yeah.
$3? So, I think that's why you saw a lot of hedge funds jump ship, right? Because they're not going to ride this thing all the way down to nothing.
Right.
And as far as other institutional money goes, there's still a lot of firms out there, mutual funds where you got to be at least $5, otherwise we can't buy you, right? So who's going to come in and buy a bunch of Groupon at $2.87 a share? Groupon, I guess, right? With the share buyback, that's what they're kind of hoping for.
Sounds to me like you're saying the stock pickers are going to become even less optimistic about this company.
I mean, I would. It's always one of those things, right? Where it's like you hope that you're going to be the guy who goes in there and buys it, and then suddenly the stock turns around, and then you go, oh, heck, at 287, if the thing goes to 5, I'm going to be rich, right? Well, you're going to be catching falling knives, right? So you're going to be rich, but you're going to have a bunch of nubs when you're trying to count that money because this thing just keeps dropping. So I don't know. I would personally wait until you see some momentum in this stock because right now all of it is in the downward motion for it.
Yeah, it's going to be interesting to see how this one shapes up too, I'm afraid. We have a lot in that interesting to see how this shapes up category.
We do.
We need to circle back on some of these see if those dead cats bounced or not.
Yeah, okay, that's probably a good end of the year segment. All right, thank you both for that. And in between these videos, you can always check out more information on stocks and mutual funds and a lot of areas of investing on our website, Zacks.com. If you're not there already, get on over to the homepage. You can link to it all right from there. With Tracey and Dave, I'm Terry Ruffalo.